Hello traders, this is Victor from TRADEPRO Academy, and in today's video we're going to be going through the advanced concepts of the market profile. In the last video we talked a lot about the introductory basics of the market profile, and today what we're going to be doing is going through a lot of the deep understanding of the market profile and how you can actually use these in a market environment, in a trading situation, and so on. So in today's video, we're going to be first going through the introduction. I hope you guys enjoy it. Drop a comment, a like, and hit that subscribe button to get updates on videos like these as we're going to be continuing through this. And we are going to be going through our breakdown, a very deep rooted breakdown of our new futures course here live on YouTube. It's going to be streamed, so I hope you guys enjoy that as well. So without further ado, let's jump right into this. In today's agenda, what we're going to be breaking down is going to be market profile shapes. We're going to be going through market balances, trending markets, and using profiles. So market profile shapes, like volume profiles, market profiles have shapes that tell the story of the market participants and what the expected move might look like. So these shapes, there's three predominant shapes that are normally distributed, which is just a very balanced distribution, right? Where you have the majority of the volume traded at the middle of the section with some kind of lower bound tails. And then we also have a P shape and a B shape profile, a capital P and a lowercase b shape profile. These profiles, the last two, the latter two, are directional profiles that can elicit some kind of market movement, right? A normally distributed profile can elicit some kind of market movement, but it is something more of a wild card, as you'll see. When we dive into these, a normally distributed market profile is a period where price actually balances. You can see right here, we have two general profiles with us. And two general profiles are the extended hours trading session here in this greenish turquoise color, and then the blue value area is going to be our regular trading hours session. So what we're looking at here is on a normally distributed profile, it's neither bullish nor bearish necessarily when we have this kind of profile. It's a very directionless market. And as you recall, these normal distributions, right? These normal distribution areas, they are what we would call a balance. A balance is a compressive period in the market. A compressive period in the market is a period where there is no new information that enters the market. It's not introducing any new information. So this no new information that comes into the market, what presents is a very general balance between buyers and sellers, right? They're fairly balanced. There's a fairly balanced demand and supply in this market, and they're waiting for some kind of new information. And when we see these kind of profiles, the real opportunity is if price escapes the balance, right? When we talk about balances in a bit, the idea is you want to see if price can escape the balance. Otherwise, price in balance is going to want to remain balanced, meaning that price would want to sustain itself where the volume is the thickest, where it can actually trap a lot of traders, long or short, trying to anticipate where that expansion might happen. In terms of the P-shaped profile, the P-shaped profile is what would look like a capital P, right? It's an accumulation of weak longs and weak shorts that meet with strong-handed shorts. What this tells us is that there's a period where prices go up, right? In this period of prices going up, there's buyers and sellers that are interacting, right? There are weak-handed sellers that are trying to hold out the market from going up. There's weak-handed buyers that are actually moving the price up, right? They're not that strong. They're very balanced at this point, right? Realistically, the buyers are a little stronger. Now, what happens is this P gets created, which becomes a compressive period at the top of the profile. This compressive period at the top of the profile is where the strong-handed sellers might appear. Now, remember from the introductory video, a strong-handed seller might be something like a large account player, right? An institutional player that comes into the market and says, you know what, this is the area where I want to get active, right? I've been waiting for this area. This is the area where I want to deploy the shorts. This is the area when I want to start shorting the market, which creates this larger battle between whatever buyers that got their confidence as prices got up, right? More and more buyers would accumulate in this market. They're now met with these strong-handed sellers, which create a compressive period. This compressive period generally dictates a reversal in prices. So this general top balance movement, right? It's created at the top of a session. It doesn't necessarily have to be the value area of the session, doesn't necessarily have to be the most volume in the session, right? Especially if it's a very long stick P, right? Where there could be a lot of contracts that have traded before this compressive period actually happened, right? The volume profile also can help identify what the volume looks like at these tops or bottoms. Now, remember, the coloration on the volume profile in relation to the TPO on a market profile is based on colors that are closest to blue being the color that's closest to the point of control in that session. So when you have an accumulation of all these green blue colors, that means that there are a lot of contracts, a lot of volume and size that's been actually traded at these tops, which in itself becomes a reversal pattern. So in the P shape, it's commonly referred to as a reversal pattern. Strong-headed shorts come out and ideally hold prices at the tops. And this means that we can lean bearish on these either, right, at the tops or the bottoms of this compressive period, right, where you have this balance, right? If price comes in and trades the top of it, for example, we're probably going to lean bearish. But especially if price opens below this compressive period that's created by the P, we're going to be wanting to test the bottom of this compressive balance to create that next leg to the downside. Now, this can be also created by a single print that can be found in the profile itself, especially if price opens below said single print. Remember, the single print is the emotional traders that come in, and you can see right here in this following profile, we come into that area, we hold the bottom of this bounce, we hold the single print, and we get that retractive movement back to the downside. We take a look at this P-shaped period, right? And this is where the market opens. This is the bottom of that compressive P shape. You can see that price rotates and holds it twice before we get that next clean rotation down and a reversal of the P shape, which then subsequently creates this B-shaped volume profile, which, as you might have guessed, we're going to be talking about next. So this B-shaped volume profile, is the accumulation of weak longs and shorts that might be interacting with one another, right? That pushes price down into these areas, and that finally meets with what we call the strong-handed buyers that create this compressive period. These strong-handed buyers that create this compressive period in this area, right, they're matching whatever sellers came in and pushed prices lower, and they're accumulating for what is expected to be a pop to the upside in this scenario. Now, these strong-headed longs create a balanced movement at the bottom of a session, right, where we have this compressive period, and as you might have guessed, we can use the volume profile to help us identify where that volume is. In this case, it doesn't seem like there's that much of thick volume, right? We're in the actual value area, right? So there is obviously a lot of volume here considering the POC is here, but there's nothing crazy outside of the value area that tells us that we're going to see that potential accumulation for the upside, right? We're just playing it based on that P-shaped movement. Now with the P-shape, it's a reversal pattern naturally, and the strong-handed longs do come out, meaning that we could lean bullish at these following areas, at the top or the bottom of the balances created by these strong longs, or the single print area. As you can see in this profile here, we do get a pop, right? This is the area we do get a pop, but overall the market kind of rotates in a large range. But the initial move is what we're looking for to see if that area can hold out, which is exactly what's going on here. This is the prior B-shaped balance that was created based on a candlestick chart. And you can see the retest of this area does lead into a possible long from about 39.50 all the way up into about 80. So you get about 20 to about 30 points. I'm just rounding these numbers of potential movement for that reversal, which is a huge, huge opportunity. Now, market balances. Let's talk about market balances. Market balances, they're created when areas trade in a range. This is when there's no new information that enters the market. And this is not a session by session. It's not single sessions. It's the accumulation of several days, right? This is an overall picture of balance. This is an area where it might be a little difficult to see if you're looking at each of these individual market profile sessions, but overall, when you look at the accumulation of the volume profile, you can see what a real balance looks like. It's a large distribution block where we have the highs and lows with the low volume imbalances on either end, right? These compressive periods, you can see each one of these days, they might be an individual balance or imbalance or a longer period of extension. But when you put them together, the accumulation of the volume creates what we call a balance. Now, if we look at each individual session where there are balances, we can also use those as session by session expansionary periods, but the overall larger expansion is going to be when we use this larger compressive balance together. So markets create these moves about 70 to 80% of the time, right? And this can be seen this cumulative profile. Markets stay in balance more than they stay in an expansionary period. So balances can be dangerous to newer traders or traders that aren't really versed to trading ranges because they can get very choppy. Prices want to stay within areas that do have a lot of volume compact within an area and tend to sustain movement within those volume areas, especially when you're around a point of control, a POC, which allows a lot of chop and a lot of aggressive movement. So traders, realistically, you can be profitable from larger balances, but you're looking for the larger extension necessarily. If you're trading a balanced area, you want to trade the ledges where all of the large traders, all the Jamie Dimons are looking for those either breakouts or reversions. Ledges where there is little volume that comes out, where there's those drop-offs of volume, is what you want to look for in terms of price activity. This is where a lot of the large orders come in, stuck traders, expansionary traders, whatever the case is. These balances are made to be traded at extremes, or ideally when the extension happens. That usually happens when we actually open outside of a balanced area. So let's talk about trends. Trends are the expansionary periods, they're extensions. Now, these trends can happen on an individual session by session, or they can happen on the larger balance profile. Now, let's talk about an individual session, right? The balance profile is very simple, right? When you look at that large volume profile area, if you open above or below, realistically, you're looking for the extension. Now, if you're looking at a single volume profile, what you want to do is find a balanced area, right? This can be, right, a B shape or a P shape, whatever the case is. Right here, we have a balanced area. Ideally, we have a normal distribution, right? But this, we still have a balanced area. In a normal distribution, what we're doing is we're looking for the opening print above or below that normal distribution. And then we're looking for the correction back into a key area and the expansion. So in this case, we have a large balance here, right? We have a single print here. Price is where this red arrow or thing is, right? This is where price closes. This is the regular trading hour session. This is the extended hours trading session. And what's going on right now is price closes here. That means price is going to open here. This is where the balance is, right? This is where our balance is. We have a single print here. The idea is for price to come back into the ledge of that balance, right? Where that single print is, where that ledge is, and hold that area to continue the expansion. So if the opening print is outside of the balance, you want to look for that pullback into the ledge of the balance for that trend to continue. That is how we find trends. That's how we find trends on a large balance and on a single individual day balance where we can call out for trend day possibilities. So even though this is a B-shaped profile, the large balance at the lows, right, where the market price opens a lot higher than the balance, traders will wait for a pullback into the balance region top, where the single print retest, if there is a single print, and you're looking to go long for that expansionary move. So to wrap this up, let's just get a quick breakdown of what we had talked about. We're going to be looking at overall pictures of the market, right? We want to see, is the market in an overall larger balance or imbalance over the several sessions, right? When we're within the balance, we know we want to trade those extremes. When we're looking to actually open outside of a balancing print, we're looking for that expansion that can be very highly profitable. You want to be making sure that you're getting those imbalanced moves rather than focusing on getting cut up in the balanced moves. You want to use each session as its own piece of information that can dictate what the following session might be able to tell you. You want to look at the different shapes of the volume profile to hint at direction, and you also want to identify where single prints sit for pullback continuations or pivots. So I can use the profile on the right as a reversal and a directional reasoning as well, as we talked about the B-shaped profile. So in this case, right, we can look at this from many different aspects. Number one, we know that we close here, right? We also have a lot of volume that traded at these tops. I can look at this as two ways. I can look for the reversal to the downside, right? Whether because we're at this ledge of a large profile, we have a lot of volume here. I can look at it for a reversal to the downside, meaning I'm initially bearish to come into not only this single print, maybe this one, but ideally into the ledge of this balance where I'm going to be looking for the long for that continued move as we have explained based on the balance principles. So you can look at this multiple different ways, and neither is more right than the other. So there's multiple different ways to use these profiles. And in the next video, what I want to talk to you guys about is a specific market profile trading strategy that involves different periods, tails, single prints, and all that stuff to identify where traders are trapped for that mean reversion. So I hope you guys are super excited about that. Drop a comment down below, hit that like button, and let's get ready for the deep breakdown of our new futures course. It's going to be streamed live on YouTube from TRADEPRO Academy. So until then, go check out our trading rooms where we trade on a daily basis live with you guys, and I'll see you there.